Will inflation slow in 2022? Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and I want to have a look at this article from Yahoo Finance discussing inflation in the US and if it will slow next year, or that's the prediction they're making. Now, before we have a look at this, jump over here to TradingView and we can see inflation sitting at 6.8%. Now, I know that some of you will scream, that's not correct. You know, they hide this or that. I know you may not trust it, but this is the number that they consider reality, and this is what influences political decisions. So you need to keep that in mind. Still, pretty damn, it's a big jump for what we're used to. We've been spoiled. Inflation's been pretty much, kind of boring, one way to put it. So, with the Fed slated to begin its rate hike campaign next year, inflation concerns remain at the top of investors' minds as a turbulent 2021 comes to a close. According to Gus Foucher, chief economist at PNC Financial Services Group, there are several key areas that may see reduced price pressures, leading to slowing inflation overall in the coming year. I do think that we'll see a gradual slowing in inflation over the course of 2022, Foucher told Yahoo Finance Live. After a big run-up in energy prices, they're going to stabilize or come down next year. I do think that a lot of the higher price pressures from the reopening of the economy are going to fade. Things like airlines, hotel rooms, new cars, used cars. He added that he believes inflation is still going to run a bit higher than the Fed wants, however. Foucher joined Yahoo Finance Live to discuss the outlook on inflation for the coming year, Fed rate hikes, and the biggest risks to growth in the economy. The Labor Department reported earlier this month that the Consumer Price Index grew 0.8% during the month of November for a total increase of 6.8% year over year, the fastest rate seen in nearly 4 decades. In addition, core CPI, which excludes food and energy. Why? Let's just... Core CPI. Let's just exclude the two most important things. Energy, which affects everything, and food, which we all need. Anyway, okay, this is how they do it. Rose by 4.9% over the last year for the fastest increase in around 3 decades. I think by the end of 2022, we'll see inflation measures using the Personal Consumption Expenditure Price Index that the Fed likes to look at around 3%, Foucher said. That's higher than they would like. They want it to be 2% over the long run. He believes that it will be the pace of wage growth and rising housing costs that will ultimately prevent inflation from moving to the Fed's 2% target in 2022. He also echoes other experts' predictions that the major theme for the economy next year will be growing but slowly. Business investment will increase in 2022, but at a slower pace because of the impact of higher interest rates. So some slowing growth, but I still think that the economy will expand at a solid pace next year, just perhaps a little bit below what we saw in 2021. Federal Reserve Jerome Powell prepares to testify before a Senate banking hybrid hearing on oversight at the Treasury Department. So, risks to growth in 2022. Foucher said that of the largest risk to growth in 2022 continues to be the path of the pandemic and its corresponding effects on consumer spending. On top of this, he believes a potentially more aggressive reaction by the Fed in response to a runaway inflation scenario also poses a threat. If inflation doesn't slow, if we still have some of those price pressures from reopening and so forth, then we see the Fed tightening much more aggressively. Perhaps they start to rise the Fed fund rate sometime in the first half of 2022, Foucher said. That could have a big negative impact on growth, as we see higher interest rates start to weigh on interest rate-sensitive sectors like housing, auto, business investment. The Fed voted unanimously on the December 15th in the last meeting of the year to double the pace of asset purchase taper to $30 billion per month, bringing all asset purchases to an end by March 2022. However, it warned in an FOMC statement that the path of the economy continues to depend on the course of the virus. As the Omicron variant continues to surge across the country, the next meeting is scheduled for the 25th and 26th of January. Okay, so here we're having some insight into inflation. That will continue for next year, but will it slow? Well, the one big takeaway here and concern is how the economy will respond to Omicron. if it isn't having the significant impact that some people hope, well, it may just keep going. That you may actually start to see a real recovery. But remember, the last time the Fed tried to scale back their interventions, what happened to the market? Market said no. So next year, March, will certainly be something to keep an eye on. What do you reckon, guys? Are you worried? Where are you investing and putting your money to protect yourself? Check out this video I did on my Realpolitik channel about just the positive impact that Omicron has on improving your immune response to Delta and other variants, which is a very good sign and hopefully showing us that this is a ticket out of this insanity. Take care.